This family home on Melbourne's outskirts comes neatly wrapped in a white picket fence.
It's a great family home.
For young families looking to upsize, competition is fierce amid housing supply shortages.
We've been seeing a rush of buyers sort of wanting to buy something before the next rate hike because there's a lot of uncertainty in the marketplace regarding interest rate cuts.
30.
The four-bedroom home selling for $1.36 million. New data from research firm Cotality shows property prices in these big markets like Melbourne and Sydney remain flat. Across the country, prices rose 0.8% in February and 9.9% over the year. The national median home value is now more than $920,000. Perth led the charge, followed by Brisbane and Adelaide, then Hobart, the regions, Canberra, Darwin, Sydney and Melbourne.
So we've been seeing a lot more activity in the lower parts of the market, both around the country on these urban fringes of the major cities, but also into regional areas as well. So a lot of buyers are seeking the opportunity for more affordable housing.
Property is hot, and so is the political debate over whether slashing the capital gains tax discount will give first home buyers a leg up.
We are alive, obviously, to the intergenerational issues in the housing market and in the tax system.
This government has run out of money, so it's coming after Australians' money.
What if rent was discounted by 50%?
A Senate inquiry is wrestling with whether reducing the government's 50% capital gains tax discount when investors sell will make it easier for first homeowners. It's a flat discount to compensate for inflation on an asset over time.
It's not hugely generous, but it is more generous than it should be.
The 50% discount is estimated to cost the government more than $200 billion in lost revenue over a decade. Some quarters tipping it could drop to 33%, and the number of properties to be negatively geared capped at 2.
Well, it's neither fair nor efficient.
Proponents of the change argue it would move investors away from property, making it easier for first homeowners.
It's the very definition of a distorted market. A market distorted because of the operation of the tax system. And it only happens, and it happens purely because of the capital gains tax discount.
While critics say scaling it back won't have much impact on prices or supply and could raise rents.
It's not as big a change as people think. It would be the rough equivalent in terms of its impact on house prices of an extra interest rate rise.
The research says effect might be about 1%. Some people say a bit less, some people say a bit more, but they all agree that the effect is tiny on house prices. If you've got fewer landlords, then rental properties will be scarcer and rents will go up.
Treasurer Jim Chalmers watching the debate closely ahead of the May federal budget.
I think the most of the modelling suggests that it's probably more around the ownership mix, so it probably provides an opportunity for essentially first homeowners to have a house as opposed to increasing supply.
Australia's property market's still a win for now.